Hello, everyone. Good morning. Not a very good one, in light of the latest news in Europe, but still. So today we are here to discuss the UK CPI data, which is going to be out in about 10 minutes from now. And as you can see here, me and Max are here on the television to cover this data for you. So as you can see on my screen, at the current moment, the forecast stands at 0.4%, while the prior figure was at 0.3%. Just to talk a little bit more about the historical movement of the indicator and as well as the projections for the future release. It is important to mention that the UK inflation edged up to 0.3% in January. Most of the upward pressure on the annual rate of the CPI at the time came from a so-called base effect of the price of the fuel, food and clothing, meaning those prices fell this year at a lower pace when compared to the same month a year ago. Further upward pressure may be expected in February too, as prices for petrol between January and February this year fell 0.2% at a slower pace when compared with the same month 2 years ago, for example, or a year ago, which was 0.6% according to the AAT report survey. Market expectations ahead of today's CPI release suggest that inflation in Britain picked up to 0.4%, as I said already. That will be a reading for February, while the core inflation remains unchanged at 1.2% after showing a slowdown in January from 1.4% measured in December. Moving forward, of course, we, as always, have here our beloved experts and their estimates on the matter. And according to their views, we have the Bloomberg survey summary where the median estimate stands at 0.4%. Average is at 0.34%, highest estimate is 0.5%, and the lowest is minus 0.1, while the total number of estimates has reached 32 this time. Just a second. What do I have here also to say is that the Bank of England, for example, recently revised down considerably its short-term outlook for the price growth when compared to the estimates from the end of the year. The central bank sees the UK consumer price inflation rising more slowly to reach 1% as late as the end of this year, basically, nearly half a year later than estimated in December. The UK's Office for Budget Responsibility also slashed its outlook for inflation, estimating CPI at around 0.7% towards the end of 2016, down from 1% is anticipated in the previous outlook. Well, weak inflation remains among the primary reasons the UK central bank remains very relaxed about tightening monetary policy. Subdued growth in earnings and strong deflationary pressures spilling over from abroad in the form of cheap oil and other commodities continue to weigh on inflation in Britain, of course. Unfortunately, we don't have any Dukascopy community member sentiment on this particular data release. That is why I would love to pass the floor to Max, who is going to cover the technicals for you guys.
Thank you very much, Kate. Hello, everybody. Moving on to the technical part of this particular data release, we have the positive surprise trading strategy, because concerning the UK CPI separately, this indicator is expected to pick up in March up to 0.4%. From 0.3% respectively in January, while the core inflation is expected to remain quite unchanged this time. Of course, we're also watching the PPI numbers and the RPI numbers, which are important for the UK as well, and also, of course, the public sector net borrowing data, which is usually published separately from any other fundamental indicators in Britain, but this time they are released all together with inflation data, and of course, there is going to be an impact because the borrowing data for Britain is really important indeed. But nonetheless, the expectations are quite positive. Hopefully, we will have some market reaction in 4 minutes from now because the pound has already been very volatile just a couple of throughout the last couple of hours. Of course, possibly in the wake of those tragic events that are taking place in Brussels. But still, we will hope to see any reaction from the pound exactly after the data is released. So concerning the trading strategy, we have the 54% bullish sentiment on the pound right now, and what is more important, we have very positive pending orders in both 50 and 100 pip range from the current market price, which suggests that the traders are betting that the sterling is going to appreciate in the foreseeable future. So it's a definitely positive signal, even despite of the most recent decline of the previous hours. I think the pound has dropped about 120, 140 pips. Well, moving on to the trading strategy itself, you can see that at the moment the cross is trading at the level of 1.4290, and of course is usually to project the possible reaction of the market to the data itself. Let's have a look at the previous reactions for the UK CPI data, and the average reaction for the last 5 months from October of the previous year until February of this year used to be 27 pips, which is considered quite a good market reaction for this particular fundamental data. And of course, taking into account this average reaction as a possible benchmark, we can project that in case of a positive outcome for both the CPI, the RPI, the PPI, and also the public sector net borrowing, of course, we can see the pound rebounding from those intraday lows and rebounding above the level of 1.43, which is exactly the first take profit level for today, because it is also right now supported by the daily S2 line resistance one for now, and also the 4-hour pivot point. While the stop loss level for the moment it is placed at 1.4250, at the same time it's a 35 pip gap from the current spot price, so it is quite likely that the reaction, if any, will be smaller than 35 pips, and possibly even smaller than the average for now, which is projected at 27 pips. So I think I have just 1 minute to go. Let me mention the technical indicators for the cable, which on the 30-minute time frame, the time frame for this particular data release are positive, so they're supporting the bullish scenario for this data release. At the same time, largely the indicators remain mixed in case we take the longer term time frame. Of course, we have other external factors which are weighing on the sterling. That's why it's quite unpredictable. Let's be honest. Okay, I think we have just 10 seconds to go until the data is released. The pound is already a bit volatile, so we see just a bit of movement in no particular direction from the data. Now we see already some downward change from the sterling. Let's wait for the numbers to come out. Let's see what the inflation data, of course, the most important one, is, whether there is a disappointment or not, or maybe the public sector net borrowing data had a bit of a negative surprise. Okay. Yeah, actually, the annual CPI was unchanged at 0.3% in February, which is a disappointment because everyone expected it to go up to 0.4%. Also, we have a slower than expected CPI growth on a monthly basis of 0.2%, and also a slight disappointment in terms of the public sector finances. It seems that the UK government borrowed slightly more than it had been anticipated. It had anticipated prior to the release. So quite a disappointing data for the UK, and therefore the initial downward change of the cable is not that much of a surprise. Some 25 pips down for this particular currency pair, and now we see a kind of already a bounce back. Okay, I think that from my side, that will be all for today for this particular data release. Thank you very much for your attention, guys. I hope you have a great day ahead. And for now, I give the floor back to Kate.
Thank you very much, Matt. Well, yes, guys, you still see the reaction here hovering around, and also the numbers in the chat section. So thank you very much for your active participation today, and also hopefully that you got some green tips, some profits on this trade. Thanks for joining us, and see you a little bit later. Bye.